In this video, we are going to cover the ICT or Inner Circle Trader Fair Value Gap. We're going to discuss how to identify it, the two versions of it, and talk briefly about how you can use it in your trading, what the theory behind it is. Guys, this is R Trades back here with another video. I want to thank you for joining me. If you are interested in supporting this content, please make sure to like, comment, subscribe, click that bell notification icon, and use the affiliate links in the description box below, guys. 80% off your Apex Trader Funding evaluation account using the coupon link in the description box below. Okay, guys, so in this video, I'm going to tell you how to identify the ICT Fair Value Gap. This is a video that I've made before, but I'm going to make it out again. There are two types of fair value gaps: the buy-side imbalance and buy-side imbalance, sell-side inefficiency, or BISI, and the sell-side imbalance, buy-side inefficiency. So, all right, guys. So the ICT Fair Value Gap. There are two versions of it, and what is it? It is an inefficiency in price delivery. Okay, guys, so the idea behind the ICT Fair Value Gap is that it is where price was delivered inefficiently. So the market should want to come back to that point sometime later to come and clear out that inefficiency. But it's an inefficient price delivery. There are two versions of the ICT Fair Value Gap, and in this video I'm just going to teach you how to identify them. So the first version, I'm here on the NASDAQ on a 15-minute chart, is the buy-side imbalance, sell-side inefficiency, or BISI. Okay, and how you identify it is it's a three-candle pattern. So what you're looking for is candle number one. The wick should not overlap the body of candle number two and candle number three. So you have three candles. The first candle here, the middle candle's body should not overlap the wicks of candles number 1 and 3. So for example here, this is a buy-side imbalance, sell-side inefficiency. So this is example number one of a BISI. This is a type of fair value gap. And as you can see, we actually have two in a row. So we have a chain of fair value gaps here. So you can identify the ICT buy-side imbalance, sell-side inefficiency as a three-candle pattern in which the middle candle, the body of that middle candle should not overlap the wicks of candles number 1 and 3. So to give you some more examples, these are very common, guys. They're all over the place. There's no shortage of them. There's another fair value gap, guys. So that's how you identify the buy-side imbalance, sell-side inefficiency. And now I'm going to talk about the converse of that. I'm going to talk about how to identify the sell-side imbalance, buy-side inefficiency. So let's have a look, guys. 15-minute chart on the NASDAQ. So similarly, when we were looking at buy-side imbalance, sell-side inefficiencies, we were looking for three candles in which the middle candle is an up candle, and the body of that candle does not overlap the wicks of candle number 1 and candle number 3. So for the opposite side of that, we're looking for a black candle where the body of the candle does not overlap the candle number 1's wick or candle number 3's wick. So this here is a sell-side imbalance, buy-side inefficiency. Guys, these are all over the place. There are no shortage of them. Okay. So in this video now, we've covered how to identify. Item number one is going to be how to identify. Okay, guys, so item number two is how do you draw up the fair value gap? Let's go with that. How to draw. Okay, guys, so whenever you have an ICT inefficiency, the 50% point of that is going to be what's called the consequent encroachment. So if you're here on TradingView, what I'm doing is I'm going to the left side of the screen, and 1, 2, 3, 4, 5, 6, you see geometric shapes. I'm going to rectangle. I then click on that rectangle there, and if you can see, there's the middle line. The middle line is going to be the 50% point of the fair value gap. Now, this is not the only way that you can draw a fair value gap. You can use a trend line tool. You can use a horizontal ray. I like to use the rectangle tool, but it's certainly not the only way that you can draw out a fair value gap. You can use other drawing tools. So the 50% point of the 50% point of the fair value gap there is called the consequent encroachment. The consequent encroachment is important because there's a number of different things that could happen there. Consequent encroachment, or 50% of a fair value gap. Okay, so guys, thus far in the video, I've shown you how you can identify the two different types of fair value gaps: the buy-side imbalance, sell-side inefficiency, and the sell-side imbalance, buy-side inefficiency. I've also taught you that using the middle line rectangle tool here on TradingView, you can also use a Fibonacci retracement tool. So for example, you can see there, if you set it to just the 50%, that will show you the consequent encroachment as well. And now let's go on the different ways. Item number 2 is how to draw the fair value gap on your chart. Okay guys, so for this portion of the video, I'm going to assume that you are using TradingView. You could be using another charting package. I've used TradeStation, I've used some others, but in this video, I'm going to assume that you're using TradingView. Okay, guys, so what I like to do is I like to go to the geometric shapes here, and then I like to click rectangle. I like to click on the weak magnet here. You could also use the strong magnet, so you have that highlighted. And then identify your fair value gap. And what you're going to want to do is you're going to hover your crosshair over the first candle and then snap it to the second candle. Then you can draw out your rectangle. If you double left click on the rectangle, you'll see the style here. I just have it set to middle line purple. I like to check the middle line box. You can see on the background I have a 25% opacity. You could also extend it to the right, extend it to the left. Not something I would do, but you can do that. And then guys, if you go to the text box here, fair value gap, right? You could mark it BISI, would be fine, but I usually just mark it FVG. That's on the text box. And then what you're going to want to do is you're going to save it as a template. So you can see I already have a fair value gap template, but however you want to do the drawing, you want to save that as a template. And then once you have that drawn out, that is one way that you can draw the fair value gap. I like to use the rectangle tool. Let me show you a couple of other ways that you can draw out a fair value gap. So you can use the horizontal ray tool. That will draw out your fair value gap as well. So that's one way that you can do it. You could also draw it out by using the trend line tool. And if you hold down shift, it will draw a straight trend line. That's another way that you can draw out a fair value gap. Not my preferred method, but it's certainly available to you. So drawing out trend lines there is another way that you can draw out the fair value gap. Now, one of the things that ICT talks about a lot is using the quarters or halves. So guys, what I like to do when I'm drawing out the consequent encroachment of a fair value gap, or let's say of a long wick, is I'll take my Fibonacci retrace tool, which I use a lot, and then I have it preset for 0, 25, 50. You can see the presets here. So this will show you the consequent encroachment of a fair value gap, that 25, 50, 75. So that's how you can draw out the fair value gap. Now, the last item in this video is, what is the purpose of the fair value gap? The fair value gap is showing you where price was inefficiently delivered. Now, if you go on ICT's videos, he talks to you about how when the market moves basically too far, too fast in one direction, that price becomes inefficiently delivered. And like a paint roller, the market will tend to want to come back and paint over that at least part. So the market will want to come over and at least paint, as in retrade through, at least part of that fair value gap. So let me show you some examples of where the market does that. So using our rectangle tool here, we can see that we had a buy side imbalance, sell side inefficiency. Notice that the market came back and bounced off exactly the 50% of that fair value gap, right? The middle line is the 50% tool. But notice that it did it twice. So notice that the market came back and bounced on that middle line there twice. So again, the theory is that the price was inefficiently delivered, and the market should at least want to come back into that fair value gap. Now there's more you can do with fair value gaps that I'll be talking about in future videos, but that's the basic premise. So another example here of a fair value gap. Notice that the market inefficiently delivered that price, and what did the market come back and do? Traded back through that inefficiently delivered price, and then notice that on the second touch there, the market reacted pretty well off the 50% point of this fair value gap. So guys, that's the basic theory, the basic notion behind the fair value gap. Okay guys, so just to recap in this video, I taught you how to identify a buy side imbalance, sell side inefficiency. I taught you how to draw it on your chart using TradingView. I showed you a few different ways that you can draw it on your chart. And then I briefly discussed the idea behind an inefficient price delivery. I want to thank you guys for joining me. If you like this content, please make sure to like, comment, subscribe, and use the affiliate links in the description box below.